As earnings season kicks off, let's investigate what is really going on. Joining me is, of course, Jonathan Corpina on this Tuesday. So, Jonathan, as earnings trickle in, we're hearing some mixed results, but in total, earnings have been lower year over year, about 4.7%. Revenues are up 2.6%. What's eating at the success?
There's a couple of factors that are out there, but the one thing that I think is kind of keeping our market where it is now is that the expectations really weren't that high heading into earnings season, right? The analysts didn't set the bar too high and really prepared investors for kind of a cloudy earnings season. So that's kind of where we are at that point right now. But I think, companies have been trending, very lightly as to what the forecast is going to look like moving forward. We continue to talk about interest rates. We continue to talk about tariffs. We've got fluctuation in currency prices. So I think right now it's really all about preparing the investors for what the next few months are really going to look like. And they're not painting a rosy picture, but that's okay, because as long as we're prepared for that, the markets are going to continue to be able to trade within this this range that we've seen.
And we are surely trading in a range. What do you think about employment? I mean, we're seeing unemployment reach numbers that we haven't seen in a while. Wage growth is going well. Do you think that this is becoming unsustainable for companies?
Well, at some point, we're going to have to see that, stabilize, right? We've seen the economy grow over a long period of time, and this has been an area that everyone has clearly focused on, and one that has given Main Street investors kind of like their barometer as to how our economy is doing, right? Our economy is strong because our job market is strong, and maybe you can, vice versa that. But I think at this point right now, the jobs numbers are helping us maintain this area where we're trading at, right? It's been a positive story for a long time. Do I think it's going to continue to trend in the direction it's trending? It can't always. At some point, it's going to have to kind of find their spot there. We will see some headlines coming up, I would think, by year end or in the beginning of next year, of some some layoffs of companies as they kind of try to trim their expenses.
I see. So it will neutralize themselves when we see in the long run.
Yeah, it's going to have to at some point.
Okay. Jonathan, taking a look at earnings. Energy is by far the worst performer this earnings season, and the sector isn't doing that well either. Now, you and I have been watching the rig counts go lower. We have competition from renewables. This is something that the president has supported, this industry. He's deregulated it. Are we going to still have the U.S. be a competitor in oil production in the long run?
Yeah, I think we're going to have to see that. I mean, it's getting extremely competitive, whether it's within that fuel or other assets that are out there. And I think as we continue to see OPEC, flex their muscles as oil prices have fluctuated. But it's amazing that, oil for this short period of time has kind of stayed in this range that we continue to see it at. But it's clearly an area that, the president is going to continue to focus on, to comment on, and wouldn't be surprised if this is going to become one of the hotter topics in the election coming up.
Okay, well, you know what? Oil is in a range. Indices are in a range. What's it gonna take for us to break out of this range?
Well, when you say break out, which way, up or down?
Well, either one, break out or break down. What do you expect?
So earnings season is just going to kind of keep us, ho-hum in line here. Economic data on our calendar, I don't really think is going to move the markets. I think we're going to continue to get into this same kind of Groundhog Day pattern of watching the headlines that are coming out of Washington about China, right? I mean, we're close, we're not close, we're getting closer, meeting on, meeting off. So it's like, we're getting tired of this, but unfortunately, this seems to be really dictating our markets at this point right now. I don't think interest rates are going to, we're going to continue to talk about it and look at it and focus on it, see what the Fed does next, but I don't think that's really going to be market moving. And as we count down the end of 2019 and getting closer to 2020, this election year is going to be really interesting as to how the markets are going to react to how the next few chapters are going to play out.
It will be an interesting election year. Great point. That's Jonathan Corpina from Meridian Equity Partners.